Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. As the Nigerian Communications Commission debunks authorizing tariff increases, we get an outlook for Nigeria's telecom sector in 2025. And Egypt's central bank issues $800 million in treasury bills auction denominated in US dollars. And South Africa grants crypto licenses to 248 firms, another 56 applicants waiting in the pipeline. And it's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out in the commodity markets. Now we see for gold. Gold prices ticked up while investors look forward to the U.S. Federal Reserve's interest rate outlook. President-elect Donald Trump's tariff policies, which could shape the metals 2025 trajectory. Spot gold, that was up 0.2%, $2,626.30 per ounce. That's an early trade. Gold futures gained about 0.3% to $2,638.70. The dollar index has been rather flat, helping gold maintain its sideways movement. That's according to most analysts that track that market. For other parts, other markets we track, their policy shifts, including potential tariffs that are shaping what's playing out with platinum, palladium, that's trading at $912.84, up 0.1%. Silver, up 0.1%, $29.40. Losing that $30 psychological level. But the bullion has gained over 27% so far this year, has scaled an all-time peak of $2,790 on October 31st, fueled by significant Fed rate easing, including a jumbo cut in September, along with heightened political uncertainties. All right, let's get a check on the oil market now. See, oil prices slipped on Monday, and they're still down in a thin holiday trading ahead of the year end. Traders await more economic data from China and the U.S. That's coming up later this week, but as marginal, 0.05. That's for Brent, $74.13 a barrel. For U.S. WTI, that's 0.10% down, $70.53 a barrel. Keep tracking that market to see how it plays out. All right, so all the stories now. Nigeria has received a $1.5 billion loan from the World Bank following implementation of the fuel subsidy removal, introduction of key tax policy reforms by this present administration, the fastest disbursement ever received by Nigeria. The loan is part of the nation's reforms for economic stabilization to ensure transformation, development, financing initiative. The first tranche of the loan, that was disbursed in July 2nd after approved on June 13th, 2024. However, its second tranche was tied to the fulfillment of some key reform conditions given by the World Bank. It was also disbursed in November. That's November 2024. And telecommunications operators in the country have warned of service disruptions unless tariffs are adjusted to cover rising operational costs. The chairman of Association of Licensed Telecommunication Operators of Nigeria, Alton, as Mr. Engineer Benga Adebayo, he attributes the challenges to inflation, exchange rates, fluctuations, and rising energy prices. While tariffs have remained unchanged, Engineer Adebayo cautions that without tariff adjustments, operators may cut services in certain areas, which could disrupt businesses and essential sectors like security, healthcare, education that rely on telecom services. While facing these challenges, Mr. Adebayo remains hopeful for the sector's future if immediate action is taken. And talking about actions now, see the Nigerian Communications Commission dismissed claims of a telecommunications tariff hike allegedly set to take effect, that's for January 2025. But let's get an outlook now for the telecom sector in 2025. Joining us is Mr. Oluwole Begunde, is a research director at Insights, joining me right here in the studio. Great to have you. Compliments of the season.
Yeah, thank you for having me.
Yeah, I remember earlier, we discussed the first one that came out, that the NCC, gave approval, for the increase. But apparently that's not happening, according to new statements from the NCC. Quite interesting. I'm sure there was jubilation when the news first came out,
yes,
for tariffs, but I don't think consumers will be jubilating.
No.
Right. So how do you see it?
I think it's something that has to happen eventually if we need to save the industry. Let me give you a backdrop. So the telecom market as we know it today is about 25 years old. And pre what we have now, we used to have Nitel that was quite dysfunctional, epileptic in services. So the government at the time thought the best thing to do was to liberalize, to regulate and privatize Nitel at the time. So that opened the floodgates for foreign investments to come in. Capital from India, from Zimbabwe, from South Africa came into the country. And that was what built what we have today. The MTNs, the Airtels, Etisalat at the time, Nine Mobile. Then local money started coming in from Globalcom. That's what has built all of this today. And it is an investment, hoping for profitability. The challenge is that when the market starts to shift and they cannot really be profitable anymore, that becomes problematic. You look at the books of the likes of the MTNs, Airtel, they've been declaring losses last year, and most likely happen again this year. That doesn't appeal well for investment. So for us to save the market, to make it profitable again, the NCC has to allow that price or tariff increase. It's been a long time coming, almost for 11 years now. Has to happen. You look at the market.
So you're telling me so far there's not been any kind of increase, for text messages, phone calls, data, nothing at all?
Not significant compared to what is happening in the market. Let me give you a context again. So in 2013, if MTN wanted to buy a server, or any of the providers wanted to buy a server that cost $1 million, that is 150 million naira. If the same server was to be bought today, to be cost them 1.6 billion. That's almost 1,000% increase in cost for them. And we are paying naira and kobo for our services. How do they manage that? Cost of diesel has gone up in the last 10 years. Inflation in 2022 was about 17%. Last year was about 26%. This year about 33%. It's no longer sustainable for the industry to go like that on the same prices. That is why they are fighting for that increase in tariff. And honestly, if the industry has to be saved, it has to happen.
And I'm sure, some consumers will say, well, so what? My salaries haven't gone up either, at this point. And we've seen what has happened with inflation, currency devaluation. Some might say, I think the telecom industry should just suck it up at this point.
It's a good argument, but it won't fly. Look at the airline industry, for example. You want to buy a ticket to the US on any of the international airlines, it's high. You have to pay because it's foreign denominated, right? The same thing in the banking sector, every other sector has adjusted. So the telecom sector has to be allowed to adjust. If not, again, it's a P&L thing, profit and loss. If it doesn't make any more sense to invest, then money stops coming in. This year, MTN Nigeria was the highest revenue generator for the MTN group. Is nosedive to number 2 now. What that means for them is that in the group level, Nigeria becomes deprioritized to investment. So what happens next year if they keep going down, declining, Nigeria becomes going down in that pecking order for investment. If that doesn't happen, as we just heard earlier, then they will be shutting down services in different locations where they think they don't have the necessary IOI to support their business anymore. That's what's happening.
Right, and looking at the industry at this point and, seeing the pains, that some of these providers are going through, do you think, with what we've heard from the NCC debunking at this point, maybe it's just a prelude to what's going to happen, and at some point the NCC will say, okay, right, you guys have to go ahead now. You see that happening?
My opinion is that there's a lot of back and forth political will up and down to ensure you're doing it at the right time. Because, of course, there's a lot of business involved, there's politics involved also. The admin, current administration has to ensure that they're doing the right things so that they're not seen in the bad light by the people. But again, we're trying to run almost a capitalist industry in that telecom space. That's why it was regulated and liberalized so that money can come in and build it. Now, if you want to sustain that level of growth in the market, it has to be profitable for money to still come in. The big problem is the fact that a lot of our tech is imported. And that has to be Forex. So you can't have Forex keep growing exponentially and the prices consumers are paying locally stays the same for a decade. It can't hold for too long. And that's why the telcos are almost literally shouting and saying, look guys, help us.
So break it down for me. They don't get this tariff increase. What's going to happen in 2025?
I suspect that quality of service will decline further. Because again, it's P&L. They're not charity organizations. I suspect that in areas where they will deprioritize areas that are not, in terms of ROI, the best for them. Because the cost of diesel, the cost of staff, cost of all of that, that's what's happening in those kind of areas.
Right, so if I try to make a call, it's not going to go through?
It may not go through, depending.
If I'm trying to browse?
Quality might just decline. Starlink, for example, I read today, again, is trying to increase tariff again from about 38,000 to 75,000. So it's not a local thing, it's not a Nigerian thing. It's not that MTN is greedy or Globalcom is greedy. It's global. There's so much happening in the market, and the math is not mathing, as the case may be. And that's why everybody is like appealing to the regulator to help ease that pain a bit. Although, in my opinion, again, I don't think tariff increase will necessarily take care of everything.
Is that a silver bullet?
Exactly. It will just provide some relief for about a year or two. The major thing is the Forex thing. Because if Forex keeps rising, and we keep importing our technology, whether hardware or software, that problem will still be there. So the long-term solution is still to grow local tech, the skill sets locally, create tech hubs that can support what we use locally so that we're paying Naira for it and the customers are paying Naira. So there's a Naira to Naira thing, not Naira to dollar as it is right now.
Right. All right. So, going into 2025 at this point, there are a lot of expectations, but some say there's still a bright spot, for the industry, regardless of this back and forth with, tariffs. Do you share the same optimism?
Yes. Nigeria is it's the biggest market in Africa. So the numbers are there. Like it's just population. 5G, for example, is not even tapped. We have 5G in the country, but the market is still very green. So the market is there, but you need investment in those areas because it requires a lot of skill, expertise, infrastructure to deploy those services that you and I and other consumers want to buy into and pay for. That is why there is a lot of need for capex to flow into the country to build that. And the capex is flowing in for the meantime outside the country. So that Forex exchange is there, almost poking holes in all of their arrangements. But in terms of opportunities, vast opportunities is there. There's a reason why Starlink is keen about Nigeria. They've seen the holes, they've seen the gap, fixed data, they've seen that there's a market here to be played. So the likes of MTN, Globalcom, Nine Mobile, and the Rex can plug those spaces. Especially for 5G, there's a lot of opportunities. IoT is not even untapped. It is not tapped yet. So
what are you saying for 5G deployment?
So there are a lot of things that can do, use cases that can be done with 5G. Virtual reality, for example, is a big one that can be deployed. Nigeria is a big, there's a fan base for football. Everybody's watching the EPL, the Champions League.
Everybody's streaming.
Exactly.
At this point.
Now, 5G gives you a better opportunity to do it over VR. So I'm in my room, I have a VR headset on, and I'm like in the stadium in Europe, Nou Camp, Bonnabal, or Old Trafford. It's a different experience that 4G or fiber can give you. 5G can give you that. MTN has 5G, Airtel has 5G, Mafab has not deployed. But if any of these guys can pull up this, it's a game changer. Because there's a massive youth population that love football. I mean, the betting industry in Nigeria is big today because of football. So people can watch VR, in high definition, anywhere they are in the country, and it's like you are in the stadium in Europe. So that's just one use case. In healthcare, the same thing. Even in broadcasting,
right? If
there was proper 5G,
right,
I could be in my house doing this interview, and viewers would think I was here.
And I could broadcast too from home.
Straight. So there are a lot of opportunities that are there that are on tap.
I just hope my dog doesn't, come in at some point. Well, I guess, so much to unpack there. 2025, just a few days, at this point. We're technically, almost there. It'll be interesting to see how all of this plays out, the back and forth with the NCC, and most of these telecom operators. But it's always great unpacking this with you. Thank you so much. This is Oluwole Begunde, is a research director at Insights. Always great having your perspective here.
Thank you for having me, and Happy New Year in advance.
Happy New Year in advance. Wow, incredible. 2025 coming just like that. All right, we'll take a break now. When we come back, we'll head straight to the markets. Just stay with us. All right, welcome back. So a lot to unpack at this time. We're seeing, just the final trading day of 2024. That's coming up tomorrow. Quite interesting. We have a lot to unpack. What's driven sentiment in 2024? What's going to drive sentiment in 2025? That's regarding the markets. We've seen the impact of interest rates. And, with other climes, looking at the U.S., we've seen the U.S. Fed say that there's not going to be up to 4 interest rate cuts in 2025. That's been cut down, to about 2. There's some expectations that here in Nigeria, the Central Bank of Nigeria's Monetary Policy Committee, they could actually start looking at easing in 2025. But so much there to expect. At this point, inflation. If inflation keeps staying stubbornly high, then I guess that leaves the Monetary Policy Committee no choice but to keep hiking, and that's also the same obtainable that's in the U.S. All right, let's go to Berlin now and see what's playing out. Happy, and we're going to be talking about the new year right there. How healthy was the public insurance sector in Germany? That was for last year. What to expect for next year? All right, let's talk to Lars Halter now. Lars, talk to me about this insurance industry. How healthy were Germans in 2024?
Thanks for having me, Ladi. Well, looking at the headline number here, it's not great. On average, German employees were out sick 17.7 days this past year, and that's a new record. A year earlier, the number stood at 17.4 days, and looking a bit further back, before the COVID pandemic, the annual average stood at 14.1 sick days per employee. Now, what is bothering Germans? It's mostly respiratory diseases, so that covers everything from the cold to the flu, throw in a few COVID infections, but of course also some tougher conditions like pneumonia. Then second on the list are psychological conditions with patients suffering from depression, from burnout, angst, or panic attacks. And then third on the list are musculoskeletal issues, and those include, of course, everything from injuries and pain in joints, ligaments, muscles, nerves, and tendons, starting from the spine down to, let's say, carpal tunnel syndrome in your wrist.
All right, so why is the number of sick days going up? Why are Germans getting sick more often?
Well, I think fortunately, they're not getting sick more often, but they stay home from work more often. And there seems to be a direct link to the pandemic a few years ago. I can tell you from my own experience that I used to go to work when I had a cold, and usually even a light fever wouldn't really stop me. There's that idea that you're needed at your job. There's a sense of responsibility, of course. But the pandemic has changed that. Nowadays, people feel more of responsibility to actually stay home and protect their co-workers when they're sick. Obviously, with the experience we had during COVID, with a highly infectious disease spreading fast, we learned that the best way to avoid more damage is to keep others safe and maybe just really stay in bed and get better to be back at work soon then. Now, that would explain why especially the number of respiratory cases is up too. Now, one thing I found interesting in the report that I saw, the number of sick days in southern Germany is quite a bit lower than in the northwestern part of Germany, and the situation is worse in the northeastern part. Pretty much the entire region of the former East Germany has about 15% more sick days than the average. I'm not sure why that is, but I guess that warrants a deeper look at some point.
All right, turning to the markets, what are investors looking at today?
Well, German shares finished last week with a few points up, so it seems the losing streak is over, but the DAX has dropped again under 20,000 points, and most experts are saying the index won't make it above that level anymore this year. The reason for that, it's a short trading day today in Frankfurt. Professional investors are pretty much done for the year and have closed their books. It just doesn't look like there will be much volume today, and after today's shortened trading session, markets will be closed then on Tuesday and Wednesday for New Year's. Regular trading won't happen until Thursday, and pretty obvious there won't be much in terms of news until then either.
All right, thank you so much. That's Lars Holt today, giving us details of what's playing out all the way in Berlin. Thank you so much, Lars. All right, now let's take it on to the UK now. We have Juliana joining us. Great to have you, Juliana. So it's a fresh week, but not many days in this week for 2024. What data should we be expecting in the UK?
Good afternoon, Daddy. It is a fresh week. It doesn't feel fresh, actually. Well, I could say it does feel fresh because it's incredibly cold in the UK. And I suppose in terms of headlines, it's pretty quiet on the data front. We're not expecting any new data this week, apart from some data from the nationwide house pricing index, which is likely to show, which anybody living in the British capital knows, that London house prices are really high. I think big talking point this week in the UK does happen to actually be the weather. In fact, Gatwick Airport has had to cancel dozens of flights due to fog. And I know the Met Office have issued severe weather warning across the UK, impacting almost every region on this island. So please do be very, very careful. It's likely to be very unsettled and very windy. I suppose we haven't spoken for a while, so just to catch you up on some of the data that we got last week, really, which was providing a snapshot of the UK economy in Q3. Not great that there was some revised data out from the Office of National Statistics, basically showing that in the third quarter, the UK economy didn't grow at all. So we had quite a wide period of stagnation, which is not going to be great news for Chancellor Rachel Reeves, who's had a really bumpy couple of months after the announcement of her budget and those £44 billion worth of tax hikes. In fact, there have been so many open letters, including one this morning from some retailers basically saying that, look, there are going to be, in the next couple of months, more job cuts on the UK high street. Of course, we know Boxing Day in the UK, really popular for people to go out spending, trying to cap a good deal in the sales. But according to the data that I've had a look at, you know, those numbers were down. Footfall was down 9% year on year. So not great. And jobs are going to have to go in the wake of that. I think there were about 200,000 jobs cut from retail in the UK this year. What is that going to spell next year? There have been discussions as well about the city and the fact that the London Stock Exchange is yet again losing its kind of gloss to the likes of New York, the NASDAQ and Amsterdam. So, as we end the year in the UK, we do end it on a pretty gloomy data. And I think Sir Keir Starmer is really going to have to work very hard with his Chancellor to try and find some innovative economic, opportunities if we don't end up like what's happening with our friends in France and Germany.
All right, so we have the last trading day of the year. That's coming up tomorrow. What are you seeing in the markets today that might give us an indication of what's going to play out tomorrow?
Well, yes, it's the penultimate day of the year, and we've got the FTSE All-Share in negative territory, unfortunately. The numbers are showing that the All-Share's down 0.26% at intraday. FTSE 100 down by 0.20%, and the FTSE 250, Laddie, the domestic market, that's down by 0.21%. We don't actually have the live currency data, but the British pound, believe it or not, has not had a bad year. In fact, it is one of the highest performing G20 currencies of the year. Is it going to end with a bang? we'll have to wait and see tomorrow. I suppose that is one glimmer of hope for the UK economy. But apart from that, it is incredibly cold and incredibly grey, and the markets are reflecting that at intraday.
Right. I guess that's kind of expected. But thank you so much, Juliana, for giving us details of what's playing out in the UK. Thank you. All right, now let's get a check on the markets right here in Nigeria and other markets we track in the global space there. Great to have you, Will.
How you doing,
final
Abby?
trading day,
Yes.
2024, tomorrow.
Penultimate trading day today, final trading day tomorrow.
Tomorrow.
We're keeping our eyes peeled on what the market has for us.
Right.
And it's already looking very good. Santa is here with early
I guess
gifts. Oh, yeah, Santa,
for Nigeria, yeah.
Santa really, that Santa rally we expected. We did see that Santa rally, and we're hoping that, we kick off the new year, with those, positive.
We'll definitely be looking out for that. Maybe a new level for the all-share index.
Of course. We're already at
Or maybe a
103
pullback.
at the time I checked, 103,000 level. I hope we get, past that, that resistance. I think we just when we get to 102, 103, we go back. But I
Right.
hope we cross that, and then we'll see new heights for the NGX,
All right.
especially
We're
we have
watching
this
out
new
for that.
distance. So we're just going to be looking at what's happening in major equities that we track at intraday. In Africa, we're seeing major stock markets were in the red at intraday, except for Nigeria's NGX, which was the outlier. It was up 0.85%. That's at the time I checked, and we've seen that surge for the NDX. That we're at 103,000 points. And we look at South Africa, seeing it in red territory at intraday, 0.25%. I'm hoping that we see a turnaround before the close of business. Now, looking at elsewhere in Nigeria, Egypt's EGX, we see it in the red zone, 0.86%, and we see Kenya on Friday closing up 0.51%. But we're just going to be looking at what's happening in Nigeria's stock market. Now let's take a quick tour of what has happened, the highlights. This is the penultimate trading day for all markets before the new year, and we would like to take stock of how the NGX has fared in 2024 and what prospects it holds for investors in 2025. And to have this short conversation, we're going to be bringing on Professor Uche Waleke. Is joining us from our Abuja studio. Professor Waleke, good afternoon. It's good to have you on the program. Professor Waleke, we're seeing a whole lot happening with the NGX right now. We're seeing that if you look at the screen behind me, we're seeing the NGX, can project that. We see the NGX surging. First of all, we see that in the first half of the year, we're seeing it at 33.81%. And now we're seeing it at year to date is about at the 36% levels. And we did have, one of the things that boosted that performance. We see new listings. We saw Ardell come on board, and that boosted the NGX all-share index. We also saw it crossing that 100,000 points level that's been sticking at 99, sticking at 96, 93, 94, and we see that crossing and maintaining that 100,000 level. For you, what do you think? Well, looking at the performance so far, Prof, is this what you projected for 2024 at the start of the year? And have we hit that target that you have for the NGX?
Yeah. Thanks so much, Wills. Let me start by saying compliments of the season and Happy New Year to you and Ladi in advance. Of course, what has happened shows the resilience of our markets. If you recall, the markets began on an optimistic note in January. Year-to-date return as at end of January was 36.9%. Today we are having about the same year-to-date return. By December, 36%. And this has happened despite all odds. This has happened against economic, headwinds, against rising inflation, against rising interest rate environment, and also exchange rate volatility. So, as I said earlier on, it speaks to the resilience. But if you recall too, I had written on January 1st this year, I wrote an article titled "Crystal Gazing the Nigerian Capital Market in 2024," where I said that the market will still be positive, but of course there would be a pullback. Recall that the markets ended last year at a very high 45.9% return, year-to-date return, and that was the I think number one in the world. So, and I said, I predicted that yes, while it will still be positive, but there will be, we are not likely to get to, that level. And that's precisely what has happened. Now, we also note that in the primary market, for example, what actually turbocharged that segment of the market, you can attribute to the recapitalization exercise regulatory induced by the Central Bank of Nigeria. So we saw some traction in the primary market on account of the, recapitalization. Outside of that, we didn't really see, a flurry of IPOs as one, would have expected. And of course, in the bonds market, we saw the government also, taking dominance. The FG, came to the market a couple of times, including even issuing domestic, dollar bonds. We've also seen one or two states also coming to the market. So largely, I would say the market, has done well in 2024. The biggest dip we saw was in May. If you recall, it was in May when the market tanked. When I say the market, now I'm referring to the equity segment of the market, tanked by 6%, minus 6%. That was the highest we had, and that was on the back of, if you recall, the announcement then on banking sector recapitalization. Banking stocks went down, and even as we speak, they have not fully recovered, because banking sector returns on the average, year to date, is still below, still underwater. In other words, still below the average of 36.6 or so that we have, because banking sector return is just around 21%. Okay, but we've seen some stocks, sectors to outperform this average, this all-share index. Talking about the oil and gas sector, for example, where we are recording performance as high as 159% year-to-date return in the oil and gas sector, buoyed by the likes of Seplat, MRS, Owando, Total, okay? And that's not unconnected with, again, what has happened in the oil sector, particularly the favorable oil price that we have witnessed, for much of the year. So overall, I would say the market, yes, performed well last or in the outgoing year, and we can also say it's reflective of even the GDP growth number that National Bureau of Statistics has been releasing. If you read the last one released, it spoke about the financial services sector, growing by over 30%. So the financial service sector has been the sector actually powering, including, powering growth in the country, and to a large extent, the stock markets, has been reflecting that, because it's also been witnessing positive growth rates. Today, year-to-date return is above inflation rate. Inflation rate of 34.6%. Returns on the capital market today are positive. In other words, real rate of returns are positive, higher than inflation rate, and that's about one of the few sectors, one of the few markets you can have returns that are giving you real positive rate of returns. Many others are, negative. Okay,
Prof, you mentioned the oil and gas sector in terms of the sectors that boosted the NGX this year. What about the underdogs, the penny stocks that have, we have Julie PLC, we have NEM, we have some stocks that actually moved the market they're not like the big giants in the market, but have seen phenomenal growth in terms of their value, their share price. What would you say triggered the movement in the price movements in those stocks?
Their fundamentals, basically, of course, savvy investors would always look out for market fundamentals. So for penny stocks generally, particularly we find a number of them in the insurance sector. Look at that sector, for example, where you also have a number of penny stocks. What has happened? The insurance sector too has by far outperformed the markets, okay? If you look at the year-to-date return for the insurance sector, it's over 100%, whereas the all-share index is doing 36. Insurance is doing over 100. Again, that tells you that for penny stocks, there are potentials, and what really matters, are the fundamentals of those companies, and that is what, if you like, investors are seeking alpha, in those stocks.
Prof, I just want to highlight, we talked about, I mentioned earlier about the coming on board of Aradel, and that boosted the NGX in terms of the capital appreciation, the market capitalization. But we did see also the exit of some companies. Right now, currently, I think we have about 153 companies listed on the NGX. And as we rightly know, there are many eligible companies that are not listed on the NGX. Are there regulatory or policies that are restraining these companies from coming on board? Because we want to look ahead into 2025 and want to see how we can boost the NGX in terms of the number of companies that are listed on them.
Yeah, you're very correct there. And that's actually something of concern, that in a country like Nigeria, one of the biggest economies in Africa, with the number of companies that we have, just 153 companies are listed on the main bourse. Just as remember, even at the beginning of this year, there were 155. Today, 153 companies. You compare that with South Africa, for example. Johannesburg Stock Exchange has 274 companies, that are listed, and that also, of course, rubs off on the contribution of the market itself to GDP. If you look at equities contribution to GDP in South Africa is close to $1 trillion. Over here, we are saying that it's even less than 20% of GDP. South Africa is 300 times 300% of the GDP. So it's very important that we have policies that are geared towards attracting or luring, if you like, companies to the market and to be listed. There are many advantages of listing, especially looking at it from a broader perspective, the macro level. One of which is even this issue of government revenue. If we have more companies listed, there's a likelihood that the government will also get more tax. Excuse me, more revenues from companies' income tax. Okay, so the advantages are there, no doubt, and you can't. We can't
Sorry about that, Prof.
Wish that companies get listed.
Prof, I don't know if you can continue the conversation, as in, just want to talk about what's talking about, the tax you just mentioned now. We know that the proposed tax reforms, some are saying, some experts are of the opinion that it's an elixir to this capital market, to the stock market, to the capital market in general. Looking into 2025, just your own opinion. I know you're strongly for the proposed tax reforms. Do you see this being a boost for the market, or do you see it hindering the advancement, especially now that we just have about 5 million, let's say roughly 5 million Nigerians who are actively participating, local investors in the stock market? Do we see it being a boost and, having that ease on disposable income for Nigerians so that they're able to come into the stock market, save, and probably, invest? Do you see these tax reforms being an elixir for the market?
Oh, yes, Wills, there's no doubt about it. I am confident that the reforms will go a long way to, boost capital market, particularly the participation of retail investors, okay? It's a situation in which you have a reform that will help, Nigerians save. Low-income Nigerians save more money, okay? With the what is being proposed now with respect to personal income tax, the persons earning below 800,000 naira will no longer pay tax. What currently obtains is those earning, if you're earning 300,000, for example, the first 300,000 is taxed at 7%. But the proposal says if you're earning less than 800,000, you don't pay tax. So that can translate to a savings of as much as 80,000 naira, in a year. So we expect that low-income earners will save, and as they save, some of those savings will, filter into, investments in capital market investments in mutual funds, for example, where participation in mutual funds is still fewer than 1 million in a country of over 200 million people. So we expect that the tax reforms will boost the retail side of the market, the retail base of the market. And also talking about companies, you also look at what is also there in the reforms, tax reforms, the idea of reducing companies' income tax between now and 2030 from current 30% to 25%. for large companies. Okay, and of course, for small companies that that have turnover of less than 50 million, and those companies too are not going to pay tax. So all of that will help to, of course, boost bottom lines of companies and help small companies to grow. When you reduce the corporate income tax that companies pay, for example, it is going to rub off, of course, on their shareholders' wealth, and the valuation of those companies. So ultimately, I want to argue, that tax reforms, as currently been packaged, will go a long way to boost activities in the market, going forward.
So how do you see, what is your projection, apart from the tax reforms, what do you see for the NGX for 2025? What's your outlook for the market?
Yes, I want to see a market, of course, a better better performance, generally, on the back of my optimism that the macroeconomy will, stabilize further. I want to see lower inflation rates in 2025. The budget is targeting 15%, even though that may appear ambitious and unrealistic. But I have no doubt in my mind that inflation is likely to moderate, downwards from the high, elevated, number that we have at the moment. So we have moderated inflation. Once we begin to see this inflation happening, and once the central bank begins to pause interest rate hikes, and also we begin to see some stability in exchange rates, and again, if the international oil price, is stabilized, and we also begin to see a ramp up in crude oil production. The budget is projecting 2.06 million barrels per day. Even if we don't get to that, but we have improved the, improvements in crude oil production. All of that will combine to, bring about an environment where, the capital markets will, will flourish, particularly with respect to, not only issuers, but even the investors themselves. Okay, issuers will be in a position to, come to the market to issue. Okay, knowing full well that, of course, when they come, they will get results, and it will also be a veritable source of, if you like, funds, even for the government. The government is budgeting 13 trillion naira, the deficit, and if you look at that proposal, the bulk of that is going to come from, loans in terms of financing the deficit. It's just 312 billion that will be from privatization proceeds.
Okay.
Okay. 9.3 trillion of that is going to be from loans, and all of that, one expects much of that will come from the domestic market.
Definitely.
And so I think
Definitely,
that
Prof.
in 2025 the market will be more vibrant than it is in 2024.
Yes, we look forward to a vibrant stock market, and we do know that the former DG of the stock exchange, and Okereke, did say that the government should look to sourcing the funding from the stock market. So that's one big advice for the government there, to look to the stock market to see the listings of some corporates or some organizations like the NNPCL to be able to boost and drive the economy. Thank you so much, Professor Waleke, Professor of Director of Institutes of Capital Markets, Natarawa State University. Thank you so much for coming on the program.
My pleasure, Wells. Thank you so much for inviting me.
So now we'll look to the Middle East markets. Now let's see how they did at intraday. So exchanges was mostly positive. We see 0.42% for Dubai. We see Abu Dhabi doing 0.76% at intraday, still within the region. Let's see Saudi and the Qatari indexes, that's the Tadawul and the Qatari index 0.68%. In opposite directions there, Qatari indexes are 0.23%. Now Asia Pacific markets, they ended on a mixed note today, reflecting the economic concerns and the political turmoil in that region. We see South Korea has really a lot of political turmoil going on in that country, and we see the Kospi falling 0.22% there. And we also see that, this follows the deadliest airline crash, which killed about 179 people, and the impeachment of the acting president, Han Duck-soo. And we said the airline stocks plunged with Jeju Air dropping 8.65%. Japan, look at the Nikkei, there 0.96% down. That affected the rest of the markets. We're seeing Hang Seng in China 0.24% down. Mainland China, we see that index also. But on the opposite side, it was up. You see China's markets, the Shanghai index was up 0.21%, and the Nifty 50 in India doing the red as well. Ladi, a lot of just, going on, especially now in South Korea, the president was impeached, the acting president was impeached.
So much action
going on
right there,
in Asia. And that's impacting the sentiments of investors. People are wondering, it's kind of creating some form of uncertainty, especially with the airline crash. A lot of stocks are dropping, especially airline stocks.
All right, I guess we'll keep watching. Last trading day tomorrow. I guess it's expected some of these moves we're seeing at this point. Thank you so much, Will, for giving us the details of what's playing out in most of these markets we track. Then the reports at this point, I have some breaking news in the market at this time. That's First Bank, that's FBN Holdings. We're seeing that they've embarked on a significant organizational overhaul with Nigeria's oldest bank and subsidiary of FBN Holdings parting with about 100 senior staff members, according to people familiar with the matter at this point. We're going to get more details on that. There are reports that this is a strategic move there to get in fresh talents, but I'll get more on this story later, and we'll see how it impacts on investor sentiments at the close of trade today. I'll be tracking the stock there for FBN Holdings. All right, let's get to other stories now. The Central Bank of Kenya reported an increase in foreign currency reserve. The Central Bank of Kenya data showed foreign currency reserves grew to $9.2 million from about $9 billion from the value of the but the value of the shilling remained stable, exchanging at 129 shillings to the dollar ahead of the new year 2025. Followed a strong growth in foreign currency reserves, which hit about $9 billion, and that could cover 4.7 months of import cover, up from 9 billion. That's about 4.6 months of import cover in the week. And Pakistan and Kenya have agreed on a free trade agreement and mutual cooperation, and that's to enhance business and investment opportunities. The agreement will enable the two countries achieve economic stability, growth, and a better position in global markets. Under the agreement, Pakistan is expected to export pink salt, marble, and cement to Kenya, while bilateral trade in pharmaceuticals will also be increased. The initiative is part of Special Investment Facilitation Council's efforts to scale up Pakistan's profile in international trade. I will see the Central Bank of Egypt will hold a treasury bill auction denominated in US dollars, and that's coming up today, offering $800 million in new debt. The proceeds from the auction will be used to settle the maturity of a prior T-bill issue from January 2nd, 2024, from which the CBE withdrew $850 million. In a similar auction on December 2nd, 2024, the CBE received 22 bids, totaling $1.14 billion to cover an offer of $900 million for a one-year term. According to the data published on the CBE's website, the bank accepted 16 bids worth $980.5 million with an interest rate of 4.5%. This rate was slightly higher than the interest rates from the previous similar auction held November 11th, where rates ranged from 4.488% to 4.5%, with an average of 4.498%. I will see South Africa's Financial Sector Conduct Authority announced that it has approved the licenses of 248 firms to operate as crypto asset service providers, as CASPs, while declining 9 applicants. And now the regulators are yet to make a decision on about 56 more applications. The regulator further revealed that it had received 420 CASP license applications since the licensing process began 1st of June 2023. Additionally, 106 applicants voluntarily withdrew their applications after engaging with the regulator. And talking about the crypto market now, let's get a check on what's playing out. We'll see it's mostly red on the screen. with XRP, with the deepest red there. Ethereum managing to hold on in green territory, 0.65%. But Bitcoin, they're still ranging between $93,000 to $95,000. So, but it's still mostly red. We've seen that profit taking that's been happening most of the holidays at this point. Well, we'll see how Bitcoin manages to start off 2025. We're looking out for that. To some of the top stories now, we see El Salvador. They're holding 6,000 Bitcoins despite an IMF deal that's supposed to help them access some funds there from the IMF. But the IMF is telling them you might have to reduce your exposure to Bitcoin. But we see they keep buying more Bitcoins at this point, following the likes of MicroStrategy. The central bank, the Central American nation, is holding firm on its crypto-first approach, at this point, despite what the IMF is saying. Now we see Bybit, they're shutting down, that's a crypto exchange, Bybit, they're shutting down operations in Malaysia following an order from the Securities Commission in Malaysia. They flagged the cryptocurrency exchange giant for operating in the country without local registration and held Bybit's CEO, Benzu, responsible for ensuring compliance to that. Now we also see XRP dipping about 5% today. What's happening? Is the rally over? We'll definitely find out. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Good afternoon, Ladi. Happy holiday.
Happy holidays, Rume. So talk to me. I know there's some news coming out for MICA at this point in Europe, and I saw you said those rules are not good for crypto. What are you seeing?
Exactly. Europe is actually missing its opportunity, and it's immediately the MiCA bill actually came up. A couple of us were happy that that will make a lot of sense for the entire crypto space, but right now it has become a nightmare. And a lot of exchange platforms will be delisting USDT Theta as a stablecoin peg 1:1 to the US dollar on the 30th of December, which is today, 2024. It's a very bad news. A couple of the laws that have come out is really, really hostile to the industry. But again, the EU market is a tiny market comparing it to other markets. And if you consider right now, Theta, USDT, and Seco USDC actually amounts to about 80% of the entire stablecoin market, amounting to about $280 billion. So the EU-backed stablecoin is about $252 million, just a tiny fraction. But they are coming with laws, for example, saying that a certain amount of money, about 60% of the stablecoin issuers should sit in the bank. And we all understand exactly what happened with Silicon Valley Bank when we had that implosion, and it actually affected some of these stablecoin issuers. I really don't think the EU mean well for this industry, and they are going to miss out. Stablecoins are used by traders to transfer liquidity from one exchange to the other. Given all of this, considering the fact that Europe actually love a regulation, it is going to drive this innovation from Europe. I'm peradventure, I think other parts of the world don't need to emulate EU at all. Africa don't need to emulate EU at all, because we need some of this opportunity that they are losing, and the US have actually done a few of that in the past. But I think with the emergence of Donald Trump, I don't think they want to risk that. But what the EU is about doing, starting from today, I think is something that they're going to regret it in no time.
All right, we'll keep tracking to see how regulation, plays out for the crypto industry in 2025. But just give me quickly now, what are you expecting January 2025 once Donald Trump becomes president? What are you seeing?
Yeah, so for market analysts like us, we've actually seen the possibility of a slow market in the new year, but I can assure you that 2025 will be good, but for the beginning, it's going to be some very difficult time at the beginning. It's also an opportunity.
All right, we'll keep watching. We'll see how it plays out. Thank you so much, Rume Ofi. I guess I'll see you in 2025.
Well, they're ready, Laddie. Thank you.
All right. Okay, so that's how the market is looking. That's the crypto market and major markets that we track at this time. We'll give you more updates. That's for tomorrow. That's for the last trading day of 2024. Is it going to be green? Is it going to be red? But at the end of the day, we see most markets have done really, really well in 2024. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.